0.01492 on Jasmy Coin. We're back to the danger zone. And is the trend actually reversing now? Because we'd said this was the danger zone for one reason. That coincided with the previous higher low. We've come back down, we've retested, and luckily we've made a bit of a base here. You can see it's tested a few times. We're holding this level. So this is the last ditch level for the bulls before things start to get bearish. And how can you play this move? Simple. Just going to add a simple trend line on there. That's going to allow us to know exactly when the bulls have regained momentum. Unfortunately, we've got a resistance barrier that's halfway, guys, sitting at 0.01675 that we do need to talk about. And that's the level we need to overcome in the short term. So basically, the bear has come all the way back down here. We need to reassess, reanalyze Jasmy. We need to hold this level. Okay, so we are going to get into the Jasmy Coin analysis, this danger zone that is actually holding support. But before we do that, the aim of the game for me, guys, and my channel is to teach you how to read a price chart yourself, because I don't want you relying on me all the time. I want it to be a collective thing where we can look at charts together, we can understand exactly what we're looking at, and then as a group, we can make decisions and increase the probabilities of something happening and understanding exactly when you go wrong, how you can protect yourself, how you can live to fight another day. Guys, as a group, it is better. And if you do want to be part of the group, Discord is completely free. Get yourself in there. Link in the description below. So in this video, I'm going to do something different. And at the end of the video, if you think it's rubbish, let me know. I'll stop doing it. But it's going to be an educational video. And what I want to do on this is show you exactly what I'm looking for from a basic perspective as to how I know when the bulls have got momentum, how I know how far it's going to pull back, how I know what levels need to hold as support, and how I can use the oscillating indicator to help me with that. So we're going to bring that up first. We've got the oscillating indicator. You'll see your chart looks like this. We'll go through the bullish scenario first. So a bullish scenario, what's happening, guys? The bulls have got momentum. You're making a bullish trend. You're putting in a high, higher high. You're coming back down. You're putting in a higher low. Now, what can you see first and foremost? This higher low is more shallow than what this big push to the upside is. The bulls have regained momentum at this point, and then it's time to push up. Where do they need to break? Previous high. So a continuation to the upside, breaking the previous high, shows that the bulls remain in control. Pulling back, shallow pullback, smaller than the big push to the upside. Bulls regain momentum, push to the upside, breaking out the previous high. And that's what a continuation to the upside looks like. And that's a 5-wave move. So you've got between this 5-wave move, you've got areas of support, you've got areas of resistance, you've got areas where the bulls are fighting, and you've got areas where the bears are fighting. And these are these areas here, guys. It's the previous highs, and it's the previous higher lows. So one thing that you can do to help is bring up your oscillator. This is the stochastic. When you're in a bullish trend, the oscillator is doing something like this. This is overbought. Now, the stochastic RSI, when you're above 70, it's overbought. So if you're above 70 and you're coming up to a resistance point, expect a pullback. Now, this is the key, guys, in a bullish trend. You're pulling all the way back, all the way back, all the way back on the stochastic. How far are you pulling back on the trend? Pulling all the way back down to here. Now, when you're at this level of support here, and this stochastic's oversold, that means one thing. During this point here, the bulls have laid off. Why have they laid off? There's two reasons. One, they're expecting the bears to regain control. They want price at a lower level. Two, what is this here, guys? If the bulls are pushing price here on a trade, they're taking profits at this resistance level. So the bulls at this point become the bears trying to get their position at this lower level. So you can wait for the stochastic to come back down. And then bulls have got momentum, expect them to break out, expect them to take out the previous higher high. Resistance, resistance, that becomes sell orders. As the stochastic comes up, sell orders, bulls need to cool off, bulls need to cool off. They'll let the bears have the turn until the next support base, which was the previous higher high, guys. So that is your higher low. What happens? Stochastic comes to oversold, push to the upside, expect the bulls to take control until the trend has ended. And that just flips in reverse, guys, for bearish. Let's do the bearish scenario. So you've got your oscillator. Got your oscillator in a bearish trend. You're making moves to the downside. You're putting in lower lows, big swing. That's the biggest swing. Coming back, lower highs, lower lows, lower highs, lower lows. So that's the bearish trend. We know that the bears have got momentum. The bears are making the bigger swings. You can add in your support. You can add in your resistance levels. And guess what? The stochastic will do exactly the same thing, guys, but you've got to flip it in reverse. When you're bearish, like you are here, like you are here, the stochastic oscillator, as it pushes up, that becomes overbought at this level. And guess what? Rather than it being a higher low, guys, at this level down here, it becomes a lower high at an overbought. So we know that this hasn't breached the previous high, so expect the bears to regain control. So the bulls have got the small swing here, the bulls have got the small swing here, the bears have got the big swing. That's how you can use your oscillator. So let's jump into the Jasmy coin and then we'll show you exactly what I'm looking for, why this is the danger zone, and why holding this key support is actually a good thing for Jasmy coin. And we're back on the Jasmy chart. So 0.01504 is the current price. This is the danger zone. And you can see now, guys, what I was talking about was that was the previous higher low. We'd come up. We hadn't managed to maintain the higher low. So we dropped back down. And this was going to be the key level of support that we needed to hold. So you can see that this is on the daily. 1, 2, 3, 4, 5, 6 days in this range now at this support base. So if this support base holds, that's one tick. Next thing we're going to look at, guys, is the indicator. We just talked about the stochastic. We just talked about the oscillator. You can see that is hugely oversold now. So we're waiting for a bounce. And the aim of the game, guys, is to crack this trend, crack this trend. This is going to be the key resistance level, 0.01670. Remember, that was our support base. You fall through, that becomes resistance. That was the extreme high of this previous candle, and that was on the 30th of May. So that was the day before the month end. We got the big drop, and then we've had 6 days of accumulation. So 6 days in this range. Now, as this stochastic pulls up into overbought, the aim of the game, guys, is we need to take out this trend. We need to take out this key level here, which was previous support, now resistance. And then we need to take out these previous highs here. For any kind of hope, we're going to get a continuation. The bulls are going to regain momentum. So this has got a long way to go. That could be a good push. That could be a big push. We need to take out this previous high, guys. And then the next resistance point is where the bears sat at the big 200 daily moving average, 0.02324. So we could pull him down here now, guys. This is where we need to beat in the short term, 0.0167. Once we beat that, the bulls start regaining momentum. Once we take out this previous high, when the stochastic's on overbought, then that is good, guys. Aim of the game is for the next pullback to be a shorter pullback than what the previous push up to the upside was, and then you can continue. So that's a big push to the upside. That's a big push to the upside. That's a little pullback. And the aim of the game is the stochastic is oversold here. It's overbought here. And it comes back down, maintains the higher low, and it becomes oversold again at that point, giving the bulls momentum to push up to a new higher high. So if you did like the tutorial videos, guys, and you want more of these, firstly, let me know in the comments. Secondly, get in the Discord group because we're doing something different now. We're doing the chart requests in the Discord group. And this is what I'm going to be covering today, guys. Drift, Tars AI, GigaChad, Arcos, Toshi, Theta, Injective, Pith, S Fund. Any more? That's about it. So I'm going to be doing a video very shortly on those guys. So if that interests you, stay tuned. I'll drop that, hit the notification bell, and you'll be notified exactly when that comes out. And I'll see you in the next one.